I'm Hiral Dadia. Clearly, if you see in terms of where markets are concerned, a good recovery from the day's lowest levels of 18,794. Right now, we're trading pretty much near the 18,850 levels. So good up move coming in there as well. And if you see in terms of Bank Nifty, does not seem that the recovery is as sharp, but we've seen a 100 points up move right now in today's session so far, trading towards the 43,900 mark. Where from here on, that's something interesting that we need to wait and watch. Joining us on the show to discuss more on this is Kush Bohra. Kush, good afternoon and welcome to the show.
Hi, Hira. Thank you
Hi.
so much for having me here.
Always a pleasure. Kush, clearly, you have Nifty, which is trying to manage and hold at its 20-day DMA. You have the put writers, which are actually getting aggressive at 18,700, as well as higher strikes from there on. What's the sense that you're picking up? Because clearly you've already seen the Sensex, which has hit its life high levels in today's session, but apparently you still have Nifty, which is still facing some resistance.
Here, let me put it this way. I mean, even if we were to hit, let's say, 18,890 today, I mean, what significance would that really have, right? What's more important is where do we go from there?
Mm-hmm.
And to answer that question, my theory is very simple. This is very clearly a buy on dips market for me, has been for the last couple of months, and the rationale is very simple. You look at the FII and the DIA buying figure. FIIs have come back, and how? And those odd days when the FIIs haven't bought, the DIIs have. So when there is a lot of buying, from either side or both sides, there isn't too much of a downside left on the markets, right? And if I could, show you my charts, I would show a very clear, upward sloping channel that the Nifty is in from the end of March. Now, only yesterday did we sort of, slip below it, but even that was on an intraday basis. We've recovered and closed above that. So Nifty very clearly in an uptrend, and as I said, this is a buy on dips kind of a market. So as long as the 200-day moving average on the Nifty is held, which is close to 18,600, 18,550 odd levels, I would remain a buyer in this market.
Right. So buy on dips is the strategy that you're recommending. However, how difficult is it going to be to get that psychological 19,000 mark?
Well, see, it will perhaps be a little difficult given the kind of situation that we've seen, and the kind of tantalizing moves that we've seen on the Nifty. That's the only reason. Otherwise, it seems more like if more like, for me, at least it seems like a done deal, because if you see now, it's the large caps that are picking up. If I dial the clock back just a couple of weeks, it was the mid caps and the small caps all along, right? Those indices hit fresh highs some time back. But now we are seeing the big boys participate. Even Reliance is trading in an uptrend now. So when these boys participate, I don't think those numbers really matter. So it's like when Virat Kohli and Rohit Sharma are in full song, then no target is too difficult, right? So from only that perspective, I think they should be easy. However, what will keep playing intermittently is the weekly expiry role. I quite liked when you said that the 18,700 put is very active. One observation on that, day before yesterday when the markets fell, 18,700 put writers just left the ground. And yesterday, since the start of the market, we were tracking that data very closely. Since the start of the market, 18,700 started to build that base, and we saw the markets recover. Now, a similar thing is happening at 18,900 call and 19,000 call. Now, given that weekly expiry pressure and the call pressure, the markets might perhaps make a slow move towards it. But I don't have a doubt that that number will be reached sooner than later.
Right. So that's with regards to Nifty. Kush, when you move to Bank Nifty as well, despite the reversals that we are seeing, yesterday's session also we ended below the 20-day EMA around 43,800, and that is for second session in a row. Today's session, yet again, if you see, it's a pretty similar level that we are seeing in terms of the closing levels. How are you looking at Bank Nifty as well?
Again, I am very optimistic on Bank Nifty as well. And let me share my reason with you. The Bank Nifty hit the all-time high level, just, some time ago. Now, when that happens, two things are likely. One, that, the momentum will sort of continue. And, that's the first case scenario. The second is that, the stock or the index in this case will go sideways. Now, that's precisely what has happened with Bank Nifty. It's gone sideways. I don't read Bank Nifty, the consolidation move negatively at all. Couple of reasons there. You see, this move actually has come practically without the participation of HDFC Bank. I know, the stock has moved, a bit in the last, couple of months, but it's not that kind of gung-ho rally that we've seen in the other, large names. Now, once the hangover of the merger is over and the stock starts to participate, I won't be surprised, if the bank nifty hits 47,000, 48,000 kind of levels also. So that was one reason in terms of the stock levels. Also, if you see, the 20-day moving average, yes, was taken out, but there are two, key levels, or rather two key technical points, which is around the 43,300 and 43,400 zones. This 100-point band is where the bank nifty has taken support time and time again. Even just before it hit the fresh all-time highs. Also, while below its 20-day moving average, not too far away from it, right? And it's still within the 50-day moving average and the 20-day moving average band. So all in all put together, after the kind of stellar moves that we've seen in the bank nifty, in the March, April, and May kind of time zones, this is just consolidation. I'm pretty sure the bank nifty is also gearing up for 45,500 kind of levels.
Right, so that's with regards to where Bank Nifty goes. Let's look at individual counters in trade today. After last couple of trading sessions, we were seeing a lot of weakness in the HDFC twins, but there is participation that is picking up in today's session. How are you looking at HDFC twins from a derivative and a technical chart perspective? Because the volatility is expected to remain high as well ahead of the merger.
Oh, absolutely. If I can just, come at this from, let's say, two perspectives, which is the investment and the trading perspective. I'd say from an investment perspective, I don't think there is two ways about it. You just have to keep accumulating these stocks as an SIP going forward. Just one of them, as an SIP. That's something that, I'm very clear, in my mind. As far as the technical trade goes, a more near-term trading setup goes, there is a bit of a hangover. And the volatility can remain high, as you said. So just trade these on trading bounces and momentums. When the stock comes very close to its support. So for example, 1600 is a very strong support zone for HDFC Bank. We saw it slip briefly below that, but then it's resumed those levels and started moving higher. So I would just play those technical bounces. And typically what happens is these round figures, 1600, 60, or rather 1650 and 1700, such numbers have a very high derivative base. In this case, it's a put base. So this will also act as a support for HDFC Bank, in the coming time. So I would play these for, these kind of bounces. Every time it's coming close to the support levels, I'd be a buyer in these with a slightly deeper stop loss.
Right. How are you looking at a Z Entertainment? Because if you see from an open interest addition perspective, absolutely strong, specifically from a July contract space, as well as a good addition in terms of the June contracts as well. Volumes are also pretty strong. What would you advise?
So, Hiral, few times in life, you have like absolute clarity. This is one of those stocks for me. I have absolute clarity of avoiding this stock, at least in the near term. See, the issues don't seem to be getting over for this. Outside of the charts and the technical setup. If I can just bring in that perspective, the issues just don't seem to be getting over. While this will also play out on investors' mind, from a trading perspective, the stock has been forming lower lows for a very long time now. Now, 175 is a very strong support zone. It did go past that, yesterday, but due to the oversold nature of the stock, it just rebounded from there. Now, as far as trading bed goes, why would I want to be in a stock which is continuously in a downturn, has a lot of hangover, from the news perspective, from the technical perspective? There are various selling points, when the stock starts to rise. Wouldn't want to be in this one at all. So yeah, it's a clear avoid for me now.
Right. Apart from that, another stock that comes to my radar is Shriram Finance, 11% up move in the cash market. OI addition is to the tune of almost around 69%, and this is the June contract. Volumes are also pretty strong.
Well, we're very bullish on the entire NBFC space. Now, Shriram Finance is a fabulous pick. And, this is a very long due breakout that has, come in the stock now. If I start, somewhere close to end of March, the stock had seen a run up, again, consolidated with a positive bias. But, this breakout was long due. 1450, 1500 was the zone where the stock had resisted before. And once it got an opportunity, the breakout was very strong. Now it's a bit of a dilemma that the stock is in an overbought territory. It will see a bit of cooling off. So, for example, if you see that the high for the day is close to 1800 and we are already, 50, 60 points off it. So my suggestion would be, if anyone's got an existing position, hold on to it with a trailing stop loss of 1685. But otherwise, fresh entry, I'd say let the stock cool off a little. We may revisit this again, once it sort of slides a little lower.
Right. So that's with regards to where a few of the names that we've discussed are concerned. How are you looking at the metal space? Tata Steel, JSW Steel, Nalco, all of these counters have been trading under pressure. There are some short positions being built on these counters as well, specifically in the metal space.
It's a very interesting space because this is one entire sector that's giving you an opportunity on the long side and on the short side both. If you can really play it smart, if you're really nimble when it comes to your trading strategies, it's giving you opportunities on both the sides. You look at something like a Tata Steel, it's not broken beyond the 116 120 kind of range for the last 3-4 months, and sees a bit of a pressure and then sort of turns around from there. But on this, at the same time, there is buying at lower levels as well. So given the entire setup, I think these stocks are best played for momentum. And as I said, if you're nimble enough, trading strategy, it's a good idea to play these on both the sides, long as well as short.
Right, so that's with regards to where metal counters go. Let's look at few of the counters which are seeing some long unwinding in today's session. So you have the likes of an Ashok Leland, which is seeing long unwinding happening. Apart from that, names like a BHEL, ITC as well. What should the strategy be, Kush?
Let me start with Ashok Leyland. Again,
Hmm.
this stock has was overdue for a breakout. It languished to about in those 120 to 150 kind of range for a very long time. And now that the entire auto pack is picking up, this stock obviously has given that kind of breakout. Now 170 kind of resistance zone. That's why you're seeing cooling off. Also, the stock had gone into an overbought territory, so that effect also playing out. Overall, I wouldn't be too surprised to see the stock fall to about 160 kind of levels and then resume its uptrend from there. So any dip in this one would be a very strong buying opportunity. As far as BHEL goes, beneficiary of the entire capital goods space, but again, this is not one stock that shows very high moment or very rapid moves. So for me, this is an avoid for now because it's anyway close to its resistance zones of about 88 and 90. And the last one, ITC, from the butterfall jokes and the meme, king to now, investor favorite. I think ITC still has a long way to go. You see the moves in this are gradually, gradual and upwards. This is a very good sign, which means it's giving an opportunity for investors to enter, not a runaway rally. So I think this is something as an investor also you should bet on. Any moves, close to let's say 430, 35 kind of levels will make your risk reward ratio extremely favorable. So 480 is the kind of level that we see ITC, head to in the coming months.
Right. Moving on, let's see a few more other names. You have the likes of a PFC as well as ITR. Both these stocks are seeing some bit of short covering. Indiabulls Housing Finance as well. Tata Chemicals another one. What should the strategy be? Let's start off with the PFC first.
Sure. Again, the entire power space, it's seen a lot of traction. And what's interesting is, along with PFC, the likes of REC and NTPC, the names that you wouldn't normally associate it with trading are sort of, giving, very clear breakouts now and multiple, breakouts. So PFC falls in the same category, although slightly overheated, but not a bad idea for someone to enter at these levels also and stick around for let's say a level of 225 kind of a zone. A stop loss just about 200 is a good number. That's the kind of support resistance which it had will now start acting as a support zone. So a PFC still bullish. Unfortunately, not I don't share the same enthusiasm about the likes of ideas and Indiabulls Housing Finance. Which was the last one you mentioned?
We spoke about PFC, Indiabulls, L&T Finance.
Sure. So L&T Finance, again, it has given a breakout after a very long time. I think this rally should continue. But if you see, even this has moved up, quite a bit. So wait for it to cool off. I think 115 is a very good level for, a re-entry into this stock. So momentum could take it higher, but I wouldn't be a buyer just yet. 115 is where I would look to, re-enter into this stock.
Right. So these are a few names that should be on the radar. But apart from the names we've discussed, Kush, anything special from your side for the investors that they should look at from tomorrow's trading perspective?
Sure. Let me leave you with a couple of ideas.
Mm.
One stock that's given a very clear bottoming out signal and a turnaround signal is Bata India. Now, if you see, the stock had been in a long slump, right? I mean, it was one of the darling stocks of traders and investors both for a while, but lost the flavor. Now, if you see, if the attempt, is very clear and successful, the stock has now also regained its 200-day moving average and sustaining above that. So, Bata India is one stock that someone can enter into from a recovery perspective. If you're willing to hold on to this positionally, I won't be surprised to see 1700 and 1750 kind of levels also on this one. A stop loss here could be around 1620. One other stock which we've discussed previously as well, when I was here, which is Tejas Networks. Now, this stock, it's probably going to be, in the multi-bagger category. That's what we believe. But if someone is willing to take it from a trading perspective, hold on to this one for targets of 800 and 840. A stop loss here would be around 720 odd levels.
Right. So I think lots of stocks that we should be watching out for. Thank you for giving us those views as well. Thank you, Kush. Stay safe and speak to you soon again. But it has been an interesting day of trade as we speak. Clearly, closure at around 18,850 is what we are watching out for. 43,840. So there is some bit of cool off that's happened in terms of Bank Nifty as well. And the advanced decline ratio still has been in favor of the bulls. If you see in terms of stock specific action, Power Grid, ONGC, HDFC Twins, and Adani Ports, top gainers. However, the metal pack was trading weak today. ITC was under pressure, DVS Laboratories, as well as M&M. In terms of newsmakers, Blue Dart, some strong moves coming in there after an upgrade from Motilal Oswal. Lupin has got for US FDA, not for a COPD drug on the back of it, some smart gains on that one. Piramal Enterprises and Shriram Finance were also in focus on the back of the stake sale that has happened in Shriram Finance. SpiceJet was trading up in trade on the back of the settlement pack with Nordic Aviation Capital for Q400 aircrafts. Dave IT, a small cap company, but hit a 52-week high after a US company has acquired controlling stake for a 300 crore deal. Thyrocare also zoomed in trade, and this is on the back of the as ICICI Prudential Mutual Fund has picked up stake in the company. So overall, if you see a lot of movers and shakers in trade today, but a good support that did come in from the large cap names as well, which actually helped Sensex also hit new life high levels in today's session. You have Nifty, which is a whisker away from that, but how long it will take is anyone's guess. The underlying tone is absolutely positive, but clearly it's a buy on dip strategy that Kush has been recommending as well. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BK Prime and have a great evening.